In our summer 2018 barometer, we asked investors about their operations and their private equity portfolio performance over the last 5 years. And one of the findings that really stood out for me, Hani, was the difference in outcomes between those investors with some element of performance-related pay and those without.
Yes, that's right, David, and the difference is actually quite stark. Investors with performance-related pay were 3 times more likely to achieve annual returns in excess of 16% compared to those without. But it would be interesting to see if there are clear differences by type of organizations.
And I think some of that did come across in the report, with most corporate pension plans and third-party asset managers reporting that they have some element of performance-related pay, but contrasting with that, actually less than half of public pension plans reporting similar arrangements, perhaps because of the increased level of scrutiny that comes from being part of a government organisation. But remuneration was not the only factor we looked at.
That's exactly right, and as you would expect, compensation is not the only issue. Around 60% of investors find that recruiting high-quality talent, as well as their own internal resources, have limiting factors in improving their private equity returns. But even if you have the scale and even if you have the talent, there are other issues affecting those investors.
This was a point that came across from the very largest investors, those with more than $50 billion in private equity assets under management. They reported that the biggest factor inhibiting their returns was the inability to deploy as much capital as they would like with their preferred managers, with 3/4 of those large investors reporting that problem. So an interesting point from those large investors, and across the report, a diverse range of considerations for investors looking to maximise their performance.
I agree, and it's clear to me that as the industry continues to evolve and investors become more and more sophisticated, they're looking for different ways to further improve their private equity returns.